Have you ever looked at a stock chart and felt like you were trying to read a totally different language? Yeah, you're not alone. The world of stock trading can seem, impossibly complex. But what if you could actually understand the playbook that traders are using to navigate it all? Well, that's exactly what we're going to do. Let's dive in and decode what it really takes to build a winning strategy. So, first things first, let's just get a huge myth out of the way right from the start. Right from the start. The source material asks this question: is there anything such as a holy grail strategy to make money in the market? And the answer? A big, fat, simple no. So, if there's no magic button, no secret formula for guaranteed profits, what's the deal? And that's the million-dollar question, isn't it? If one perfect strategy just doesn't exist, how in the world do successful traders manage to come out ahead consistently? Well, here's the secret. The answer isn't about finding a secret, it's about building a system. And that really is the first big step in any trader's journey. It's about moving from that chaotic, frantic hunt for a quick win to the kind of clarity you only get from a systematic approach. Honestly, it's a massive shift in mindset, and it's what separates the amateurs from the pros. See that hunger to make a quick buck? It's a total trap. It just leads you on this wild emotional roller coaster of wins and losses, these incredible highs followed by these crushing lows. The real goal isn't some super complex, unbeatable formula. It's actually a simple, repeatable system that guides every single one of your decisions. Okay, so how do you even begin to build that system? Well, you start with the right tools. And for a trader, that means learning how to read the market using what are called technical indicators. You can think of them like special lenses that help you see patterns that your naked eye would probably miss. And this slide right here shows you the power of these tools perfectly. Look, on the left, you've got a standard price chart. It's just the raw data of what happened. But then look at the chart on the right. By applying an indicator called the Ichimoku cloud, that same chart just comes alive. That colored cloud you see helps you visualize potential areas of support and resistance. It's telling you a much, much richer story than just the price alone.
So what are these indicators, really? Well, simply put, they're tools. They run mathematical calculations on past data, things like price and volume, to help traders figure out probabilities. Now, they don't have a crystal ball. They can't predict the future with 100% certainty, but they give you absolutely critical context for making informed decisions. And hey, not all tools are built the same. Let's take moving averages, a really fundamental indicator. A simple moving average, or SMA, gives equal weight to all the price data, so it moves kind of slow and smooth. But an exponential moving average, the EMA, gives more weight to the most recent prices, which makes it react a lot faster. Which one you choose? Well, it depends entirely on the strategy you're trying to build. Let's circle back to that more advanced indicator, the Ichimoku cloud. Its name in Japanese literally translates to one-glance equilibrium chart. I mean, how cool is that? Its entire purpose is to pack a ton of data points into one single visual, giving a trader a really comprehensive snapshot of what the market is doing instantly. That's the power of a good tool. But here is the most crucial point. Having a toolbox that's just overflowing with indicators is totally useless without a blueprint. You have to combine those tools into a trading plan, a specific, repeatable set of rules that tells you exactly when to buy, when to sell, and, just as important, when to get out to protect your money. Let's walk through a real-world example from our source material. This is a simple plan for what's called swing trading. Just notice how every single step is defined with, military precision. It starts with finding a demand zone. That's just a fancy way of saying an area on the chart where buyers have shown up in force before. Then you wait for a very specific signal when the market opens, in this case, a gap up. And here's the key. Your entry price, your protective stop loss, and your profit target are all figured out before you ever risk a single dollar. There is zero room for guesswork here. And here's what that plan looks like in action, on a real chart. You can see the exact entry point right there, triggered according to the rules. Just below it is the stop loss. That's your safety net. It gets you out automatically if the trade goes south. And up top, you see the predefined target where you take your profits. This isn't emotional, reactive trading. This is the systematic, disciplined execution of a plan. Okay, this brings us to what might be the most important piece of the entire puzzle: psychology. You could have the most perfect technical plan in the world, but it can be completely shattered by one emotional decision. Because the market, at the end of the day, isn't just numbers on a screen. It's a living, breathing reflection of collective human hope and fear.
John Wells Wilder Jr., the guy who actually invented some of the most famous indicators like the RSI, he said it best. Letting your emotions override your plan or system is the biggest cause of failure. This is exactly why having a rigid plan is so incredibly vital. It's your shield. It's your defense against your own worst instincts. And these market emotions, they tend to follow a pretty predictable cycle. It all starts with accumulation. This is when the so-called smart money is buying things up quietly, without a lot of hype. Then comes the markup phase. This is when the public gets excited, that fear of missing out kicks in, euphoria takes over, and prices just soar. Right at the top, we hit distribution, as those early investors start selling to the latecomers who are still buying into the hype. And finally, markdown. The bubble bursts, panic sets in, and prices fall. Just recognizing which phase the market is in is a huge part of managing your own emotion. So, let's bring all this home. The goal, the ultimate goal, isn't finding some magic strategy that never loses. The real destination on this whole trading journey is discipline. It's about mastering your system, mastering your tools, and, most importantly, mastering yourself.
So what's the playbook? What are the keys? First, you've got to build that comprehensive trading plan. Define your rules of engagement. Second, you have to embrace risk management like it's your religion. It's completely non-negotiable. Every single trade needs a defined exit point before you ever get in. And finally, start small. Seriously, practice in a demo account or with tiny amounts of money until your actions become second nature. That's how you turn all this abstract theory into a real-world skill.
Look, the knowledge is all out there, and the path is actually pretty clear. It's not about finding some hidden secret, it's about building a disciplined process, one step at a time. So the only question left to ask is, what's your first step going to be? Thanks for watching.